Good evening, guys. You can see currently time is around 7:30, and let's look at Bank Nifty and Nifty trade analysis of today. And you can see clearly the market yesterday formed some kind of demand over here, clearly signifying some kind of bullishness. But here you can see there wasn't much impulsive momentum towards the downside, even after forming some kind of rounding bottom pattern over here, or you can consider it as an M-shaped pattern or triple bottom pattern. But you can see after the market found some kind of support, there wasn't much momentum towards the upside, guide. With fair value gaps, you can see all those liquidity has been taken, and market was trying to move higher, but in a very balanced move. So you can see expect a clear trendline liquidity over here. So there was this demand over here isn't as strong as what we have expected. So there are high chances the market will continue further towards the downside only. But you can see here as the market opened up, it formed a rejection candle, and if you try to plot the 5 minute zone as well as the mid of the 5 minute candle, mid of the first candle, you can see this is a zone, guys, which I have already mentioned you in every videos, and you can see the where the price again formed some kind of rejection over here and continued further selling towards the downside. But let's look deep into the trade, guys. You can see the market took support from this pivot level, and you can see this bullish engulfing pattern over here, clearly signifying bullishness, because this bullish engulfing pattern changed the whole concept from bearish to bullish, guys. In case if the market sentiment was clearly bearish here, you can expect after this bullish engulfing pattern or this impulsive candle, the price was not able to cross this way up level, clearly signifying bearishness, and you can see price continue towards the downside. But as market faced some sort of rejection over here and continued towards the downside, and there was some huge dodgy candles forming over here, there are high chances the market would continue further towards the downside itself. This is how usually the price action behaves. But you can see here, because of this pivot levels, the price was trying to hold on to this zone, guys. And you can consider this demand zone also, which actually broke structure towards the upside. You can consider this break of structure. You can consider this break of structure, and the last down move you could have considered this zone where it actually acted as some kind of demand over here. And you can see after this bullish engulfing pattern over here, the price here was trying to hold above this fib levels of this candle. And you can see even after this bearish candle, also price didn't cross this fib of this candle, and price rallied towards the upside. And if you try to plot the fib extinction levels, the high of this to the high of this, you can see you could have easily targeted to this level, or you could have kept your target to 1.68 level or to the 2.68 level. You can see how clearly the market came on the way to this 2.68 level. You could have easily exited there, but before the market actually reached there, you can see here the market again retraced back to this demand zone. This is the 1 minute order block zone, guys. You can see previous demand over here, the price trying to hold here, some kind of demand over here, and continued and reached all the way to this 2.68 level. And this is the 1 minute order block. And after this bullish impulsive momentum, in case if the market sentiment would have been bullish, you could have expected the market to retrace like this, take support from here and continued further bullishness. But you can see if you try to plot the last this candle, the price clearly closed below this fib of this candle, mid of this candle, and even broke towards the downside, clearly signifying bearishness. And you can see even market even closed below this level. This impulsive momentum is quite unexpected, guys. But you can see this looks like a last sell-off candle, and the market sentiment is changed. Market might target this liquidity over here. There are high chances the market would go reach this liquidity, or you could have targeted this liquidity as well. But you can see after this impulsive momentum, if you try to plot the fib levels, the common point between this, you can see clearly here is where the price forms some sort of rejection. This is the 0.38 level. 0.38 level, or here is where the market even faced some rejection from this VWAP level and try to continue further towards the downside. And if you try to plot the fib extinction levels, the common point between this to the common point between this and to this high, you could have targeted all the way to this 100% move. Look at this, guys, how beautifully the market has behaved today. This is the 100% move, guys. And after this bearish candle, you can see an equal size bullish candle has formed, clearly signifying some kind of bullishness. In such kind of momentum, guys, you should always try to plot this level. You can see price trying to hold above this fib of this candle. And here another bullish engulfing candle formed. And in case for better confluence, you can also add on to anchor gap level over here. You can see when this price broke towards the downside, uh, price broke towards, you can consider this bearish candle itself. And you can see another bullish engulfing candle over here. And here also the price is trying to trade above that zone itself. You can see how clearly the price took from the zero point 0.5 level, mid of this impulsive candle, and trying to break this structure high. You can clearly see this structure is being broken, and you can consider this clear break of structure with a fair value gap. So if you try to plot this order block level over here, this is the 1 minute order block. And in case if you can see, you could have also extended all the way here as well. And you can see clearly the market broke here, but there was some kind of momentum towards the upside. But let's keep that on to other side. You can see clearly the market here formed a bullish engulfing pattern, clearly signifying some kind of demand over here. And price came here, and again it formed some kind of demand over here. And you could have easily entered here. Fib extinction levels, the common point between this to the common point between this to the common point between this. You could have targeted all the way to 1.68 level, guys. This is the zone which you could have targeted. Or usually in momentum like this, you could have targeted this fair value gap, guys. You can see clearly this zone, there was a fair value gap where price was not being traded. So you could have targeted that zone, or you could have targeted the fib of that candle or 5 minute zone as well. Any of these zones you could have targeted with a decent amount of profit as well. And for short entry, you could have entered here, keeping your stop loss just above that candle itself and trying to target all the way to 100% move. This is one trade setup where you could have easily taken. And another good long setup is that you could have taken this long position, keeping your stop loss that below and targeting all the way to 1.6, or you could have reached and exited anywhere here, guys. Not just even 2.68 level. After seeing this bullish momentum and price trying to close below these fib levels, also you could have entered, there is no issue. But I'm giving you a general idea of how you need to take entries with a minimum risk to reward ratio. That's how what I'm actually teaching you. Exit entries are just for confluence, guys. In real markets, you can't actually exit because you never know how much the market's gonna move. And you could have kept your stop loss just below and targeting all the way to 1.68 level. This is one beautiful trade you could have taken. And you can see after this, clearly the market formed some sort of rejection and clearly broke this structure towards the downside. If you had a good confluence in market, you can see how clearly the market here formed a large sell-off candle. This bullish sell-off candle, guys, like this candle, you can see like this sell-off candle here also it formed a bullish sell-off candle, and the price couldn't cross this 5 minute zone as well as mid of the first candle, and rejection of price from this fair value gap. In case if you might have good idea of how market would behave, you can see clearly market closed below this low. And in case if you try to plot the fib levels here, compound between this, you can see clearly the market came all the way retraced to 0.7 level, and again market continued towards the downside. But what you can here better confirm is that this bearish engulfing pattern, guys, you can see after this bullish momentum, the price was not able to continue towards the buy side, and after this bearish candle, you could have easily plotted the fib levels here. This is the mid of that candle, and you can see price rejecting from that mid of the candle, and you could have entered just here, guys, keeping your stop loss just above that zone itself or above that candle and continued all the way towards the downside. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 2.68 level. Look at this, guys, how beautifully the market came all the way to 2.68 level. Even to the upside, the market went to 2.68 level, and here you could have easily targeted the 2.68 level as well. You can see how beautifully the market came, or you could have tried your stop loss with using 9 and 21 moving averages. As long as the market was moving below the 9 and 21 moving averages, you could have just tried your stop losses. And this is one confluence, guys, where the price rejected from the anchor gap level. And after this VWAP level has been broken down, you could have also entered here, keeping your stop loss just above that VWAP level. After seeing this kind of consolidation, clearly expecting the market to go further towards the downside. Or if you try to place this anchor level, the anchor VWAP level, you can see after this bullish momentum also price was not able to hold, clearly breaking towards the downside. You could have added onto your positions, guys, clearly signifying that the market is bearish only. So look for candlestick psychologies, guys. You can see after this last sell-off candle, usually after this last send-off candle, there is a huge selling momentum, and there might be a lot of retail traders trying to sell after seeing this impulsive momentum towards the downside. But what happened is that the market tried to trap all those sellers, guys, who might have entered here with selling position, and you can see how beautifully the market rallied all the way here. And you can see after this final bullish sell-off candle, you can see how bullish this candle compared to all these candles, guys, clearly signifying that the market would continue further towards the upside. But you can see how after this sell-off candle, the market again retraced back, and you can see this zone particularly is actually a very good selling zone. And for better confluence, you could have waited for after this bullish candle, price was not able to hold and formed bearish engulfing pattern, and price tried to break this anchor day VWAP level, and there was some kind of consolidation again further continue towards this sell side. You could have either entered here itself, or you could have, for in case if you are good at trading, guys, better experience in trading, you could have either entered here itself, expecting the market to go all the way to this zone. This is one beautiful trade setup, guys. And if you consider this impulsive momentum towards the downside, the last up move before the down move, which actually broke structure towards the downside, you could have considered, let's consider this swing itself, guys. Let's consider this swing, and you can see how clearly the price from rejected from this 0.38 level. Look at this, guys. This is a 0.38 level. Price rejected and clearly even broke structure towards the downside. This kind of momentum with a fair value gap. You can see here there is fair value gap over here, and market actually broke to this low as well. This is a clear chalk formation or break of structure as well. Break of structure, you could have, or you could have even consider this also as a chalk. Break of structure, clearly breaking this supply and this fair value gap over here, where the market took this supply over here and continued further selling towards the downside. And you can see this is another order block also. If you consider when market broke this structure low, you can consider this to be another 1 minute order block. And this fair value gap has been taken. The market came and clearly broke this low as well. Even this is quite unexpected also, but let's hold on to the trade. This is another break for better confluence. You can see after this sell-off candle, guys, you can see clear rejection price over here. And if you try to plot the high to this zone, you can see clearly the price rejecting from this 0.5 levels. This is a 0.550 level, and you could have entered short position here, the common point between this to the common point between this to the common point between this. You can see clearly you could have exited all the way to this level. This is a 100% move. This is first target. In case if the market even breaks, you could have targeted to 1.68 level. This is how beautifully the market behaved, guys. And this was one beautiful entry where you could have taken short position, keeping your stop loss just above that candle and targeting all the way here. This is one beautiful. Even you could have considered this order block also, because you can see after the market clearly broke structure towards the downside, guys. Here you can see the market actually broke structure towards the downside, and this retracement, guys, you can see how there wasn't much impulsive momentum. Even the market is trying to take all this supply and continue further towards the downside only, and this supply wasn't demand wasn't strong enough. See, you can see this demand also couldn't even break this high also, clearly signifying bearishness only. And this 1 minute order block, which acted as some kind of supply zone over here, clearly signifying bearish. And you could have better entered here itself, entered short position here itself or anywhere between here, and keeping your stop loss just above and targeting all the way here as well. This is how you could have targeted, or in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted. You can see the common point between this to the common point between this to the common point. You could have targeted to 2.68 level. Look at this, guys, how beautifully the market came all the way and exited their position as well. And if you look at higher time frames, guys, you can see clearly here the market actually broke structure with a huge demand. This is one breakout structure with a fair value gap over here. You can see this fair value gap. This is why the market has to come and grab this liquidity. And you can consider the last down move before the actual market actually broke structure towards the upside. You can consider this to be in case of 5 minutes or in case of 3 minutes. Let's say the last down candle. So you can consider this candle, guys. You can see how clearly the market came all the way and tried to retrace. So this was 1 minute order block also. You could have exited at that position as well. And you can see how clearly the market is trying to retrace towards the upside. And you can see here the market actually broke structure towards the upside. And this demand zone is not a clear demand zone, guys, because you can see clearly there is all this momentum is a balanced move where price clearly, even with this fair value gap, also the market uh, tried to grab that liquidity and continue further. But this demand zone, the last down move, which actually broke structure, was with a fair value gap here. You can see here this is the fair value gap, and let's keep that aside. And you can consider this last down move as a 1 minute order block, and this zone is 1 minute order block. But since this is a huge candle, you could have considered the fib levels, the common point, the low to high, and you can see price trying to grab this liquidity over here below this candle, the fair value gap liquidity over here. And the price didn't close below this candle, as you can see how clearly the market here closed above that candle only. You can see after this dodgy candle over here, the market tried to move high. And again, you can see another trendline liquidity over here, clearly signifying bullishness and a high chance the market would continue further upside. And if you try to plot these levels, the common point between this to this zone, you can see another demand over here after breaking this liquidity over here. You can consider this to be another demand, and you can see price trying to sustain above 450 level. So in case this 1 minute order block to this fair value gap supply taken, and this liquidity, this you can see this fair value gap also, the market is trying to fill that liquidity. You can consider everything is clearly signifying a lot of bullishness only, and you could have just entered long position, guys, here somewhere between here, keeping your stop loss just below this candle. And this structure is actually what broke structure towards the upside. So if you consider become the swing highs from here to here to here, you could have clearly targeted to this 2.68 level, guys, or this VWAP level. You can see how clearly the market came all the way here. This is where you could have exited your position, and how beautifully the market has behaved. This is what we are talking about, guys. You can see how beautifully this was a balanced move, guys, and you can see some kind of rounding bottom over here, clearly signifying some kind of demand. And you can see this 1 minute order block level also being respected. Even it broke structure towards the downside, you can see how market tried to retrace towards the upside. And this balanced move also, and the market grabbed this fair value gap liquidity and broke structure towards the upside. And this retracement with the trendline liquidity, another retracement with trendline liquidity, and clearly market tried to head higher. You can see how beautifully the market has behaved, guys. This one 0.3 rejection levels. You can see how beautifully 1, 2, 3, 4, 5, 6, 7, 7 beautiful trade setups, guys. You can see. Now coming to Nifty, guys, you can see clearly in Nifty, I have already plotted you these pivot levels over here. Bank Nifty pivot levels. Here only it acted as some kind of support, guys. But here this pivot level didn't play any significance. But here you can see in Nifty, the market was trying to move in a sideways, guys. You can see there isn't much mm, good momentum either towards the upside or downside as well. And you can see after the opening candle itself, the market formed some kind of rejection candle. But if you try to dig deeper into this trade, you can see this kind of bullish momentum of yesterday's, which actually broke structure towards the upside. You can see this break of structure over here. And if you consider this break of structure, and if you consider the last down move, which actually broke structure, you can consider this to be a 1 minute order block. And you can see how clearly price trying to take support over here as well. And clearly formed a bullish candle over here, but price couldn't break this level and continued further selling towards the downside. In case if the market retraced here, in case if the market would have continued further bullish momentum, there are high chance the market would form some kind of support over here and continued further buying towards the upside, guys. Like after this bullish momentum, the market might continue like this and further continue towards the upside, or you could have drawn the fib levels over here. When market tried to break this impulsive candle, mid of this impulsive candle, you could have exited your long position in case if you might have market sentiment would have been bullish, but clearly the market came all the way and to this demand zone as well. And if you try to plot these levels over here, the common fib levels, the common point between this to this, you can see how clearly the market rejected price over here. This is the 50 level, price rejection over here and continue further towards the downside. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you can expect the market to go all the way here. You can see this was our first target, guys, the 100% move over here. Mm, and you could have targeted here also. This is the 1.68 level target. This was the 1.68 level target as well. But but you can see the market didn't reach here and form some kind of bullish engulfing pattern. And here you can see this kind of pattern also repeated over here. You can see price trying to trade above that zone itself, clearly signifying bullishness. And you can see the market clearly broke this structure, clearly signifying break of structure. And if you consider the last down move to the last up move, you can see the price trying to take support from 0.38 level, 0.38 level, and this is how the market is behaving. And if you try to plot the fib extension levels, the common point between this to the common point between this and the common point between this, you could have exited all the way. Look at this, guys, how beautifully the market came all the way to this zone. This is the 2.68 level. Or you could have exited here also the 1.68 level, or you could have exited here as well. This is the 100% move based on your risk to reward ratio, or you could have just tried your stop losses also, guys. You can see um, I'll show you how you can trial your stop losses. You can see after this bullish momentum, price tried to take support from here. If you try to plot the anchor wave up levels here, you can see price took support over here. You could have actually taken here, not even here, guys. As we can see here is where we actually took long position. But if you try to plot anchor wave up levels, you could have kept your stop loss just below and trialed all the way here. And this momentum which actually broke structure, the market was trying to move sideways, not even breaking the 0.38 level also. If you see clearly from this zone to that high, even the market didn't reach the 0.38 level to consider it to be bearish. And you can see how clearly the market went all the way high above that zone. And here you can see this 23,600, 23,700 zone, guys. Because of option open interest data, there might be a lot of resistance over here, and sellers, because 23,700 is an odd number, there might be huge resistance over here, guys. And in case after seeing this double top also, after this bullish momentum, the price clearly broke towards the downside, and this bullishness even couldn't break towards the upside, clearly signifying bearishness only. After the market tried to continue this, after the market broke this level, guys, you can consider this 550 level, the swing low to the swing high. And you can see when the market clearly broke this level, guys, with the bearish engulfing pattern, you could have exited, enter short positions also. You can see how clearly even after this bearish momentum, this bullish candle also couldn't cross this anchor wave up level, clearly signifying bearishness. You could have just entered short position here, guys, if you were keeping your stop loss just above that candle itself and trying to target all the way to this liquidity. You could have targeted the first liquidity over here, and in case if the market is sustaining, you could have targeted all the way. You can see how beautifully the market came and continued towards the downside. But as of now, let's keep it till there itself. We might have exited our position after seeing this bullish engulfing pattern, but you can see this anchor wave support and anchor wave support over here, resistance over here. And the last up move before the down move, which actually broke structure towards the down upside, is you can consider this level, guys. This last up move to this down move over here. You can see how clearly the market came all the way to this 550 level over here. It actually barely touched this 550 level over here. And price formed some kind of resistance over here and continued further selling towards the downside. And if you try to plot the last up move, you can consider this. can consider this. You can see how beautifully the price acted as resistance over here. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you can expect the market to reach 100% level. But here the market didn't reach this 100% level. Clearly, you can see the market actually even broke this level also. There wasn't much bearishness over here, guys. You can see the market was trying to consolidate in a sideway pattern, but what we can see here is that with this fair value gap over here, the market tried to come and reach this zone over here, grab that liquidity, and continued further selling towards the downside. And you can consider this to be a bullish momentum also. This kind of impulsive momentum, which actually broke structure towards the downside and with a fair value gap. But what we need to see here is, guys, in case if the market was not sustaining above this 50 level over here, a lot of buyers might have entered here, guys, seeing this kind of support and trying to go long. But what confluences we have for the market to go bearish is that if you see this kind of momentum, guys, after market tried to consolidate, we need to look at moving averages first, guys. You can see if you look at moving averages also, you can see the market clearly broke this structure. Impulsive candle clearly broke this 9 as well as 21 moving average towards the upside, clearly signifying this to be a demand zone over here. You can consider this to be an order block also. And this is the 1 minute order block. But what we need to keep in mind is that the market didn't take good support, guys. You can see here is there was a fair value gap over here. Here the price has not been traded. This was the fair value gap. In case if the market was clearly bullish, the market would have come here from this demand zone over here. This is the 1 minute order block. Market would have come here, took this demand and continue further towards the upside in case if the market sentiment would have bullish. But here what we need to see, another important point is that after the market clearly broke structure towards the upside, clearly with a fair value gap, the market faced resistance over here, guys. You can see this looked like a last sell-off candle. After this last sell-off candle, this 200 moving average resistance and this kind of sell-off candle, where clearly buyers were not able to hold their positions and continue further bullish momentum, and this anchor VWAP level resistance also clearly signifying bearishness. Here it acted, this 200 moving average, the blue color line acted as resistance, and here also it acted as resistance, guys. You can see how clearly this zone over here which acted as resistance and this zone over here which acted as resistance because of this 200 moving average. 200 moving average in a 1 minute and 5 minute time frames are very important, guys, for you to make trading decisions. So you can see how beautifully after this sell-off candle, the buyers were not able to hold their position, clearly signifying bearishness. And in case if the market was not, after breaking this structure, you could have entered short position also, but you can see clearly if you had a good market sentiment of how market usually behaves, you could have either entered short position or seeing this rejection from this 200 moving average, and after this rejection from this 200 moving average, keeping your stop loss just above and targeting this swing, guys. You can consider this swing which actually went all the way here. If you consider this swing over here, you could have targeted the double of this swing, guys. If in case, you can see how beautifully the market came all the way here. But let's keep that to side and let's follow this order block, guys. You can see this is the 1 minute order block and the market came over here. So if you try to plot the fib levels, fib extension levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to the 1.68 level. But you could have tried as long as the market was trading below this 9 and 21 moving average also. I think that would have been far better because you can see how beautifully the market behaved here. But what we need to see is that if you try to plot the up move before the down move, if you consider this zone, guys, so this zone, you can see the market couldn't cross this 0.38 level, or if you consider this also, the market clearly couldn't cross this 0.38 level. This acted as some sort of resistance over here, 0.38 level. And if you try to plot the fib extinction levels, the common point between this the common point between this to the common point between this to the common point between this, you could have targeted to the 100% move also, but here the market didn't move all the way to this 100% move. And that's because I will tell you guys why the market couldn't move. You can see here that the last down move before the market actually broke structure towards the upside. This is the order block breakout structure. And you can see here the market was trying to trade above this 200 moving average. And if you consider the last down candle, you can consider this candle, guys. You can see how beautifully the market came all the way to this demand zone over here. This is clearly a 5-minute order block. And how beautifully the market came here, kind of found some kind of support here. You can see some kind of rounding bottom pattern and continued further towards the upside. And you can see the market clearly broke this structure, guys, towards the upside. After this bearish candle, a lot of sellers might have entered the market, clearly trapping sellers. But here, after this bearish candle, usually there would have been another bearish candle like this, expecting the market to go further towards the downside. But what happened is that this bullish engulfing pattern, this bullish piercing pattern clearly changed the sentiment from bearish to bullish, clearly breaking this structure high, guys. But here it actually broke this structure. And there wasn't any fair value gaps here, guys. But this demand zone is valid only. But you can see after the market kind of retraced but was trying to hold this zone, you can see the market clearly broke this structure high and with a fair value gap as well. Didn't break the structure, but you can see this kind of momentum towards the upside, clearly signifying some kind of bullishness and this kind of consolidation. Whenever the market consolidates like this, guys, after some kind of bullishness, it's clearly a sign of huge bullish momentum. You can see if you consider this candle itself, the price trying to hold above this candle fib itself, clearly signifying bullishness. And if you try to plot this candle fib, you can see clearly the market is trading above this 9 as well as 21 moving average, price trying to consolidate above this zone, clearly signifying bullishness. So in case if you could have taken long position, you could have kept your traded like this, the common point between this to the common point between this. You could have targeted all the way to this 4.68 level, guys, or this VWAP level, or this 200 moving average. Or for better confluence, you could have even entered here also, the common point between this to the common point between this, and the common point between this. And you could have targeted all the way to this 0.38 level. You see how beautifully the market behaved. Whenever there is some break of structure, guys, and when market try to consolidate in this kind of pattern, you can see this kind of pattern when market try to consolidate over here, you could have easily entered long position. If you try to plot the last down move to the last up move, you can see clearly how beautifully the market kind of took support from this 50 level over here. You can see this zone to this zone, how beautifully the market tried to take support. And you could have entered long position here, keeping your stop loss just below that candle and trying to target this 200 moving average, or as long as the market is trading above this 9 as well as 21 moving average, you could have traded targeting all the way to here, guys. This is how beautifully Nifty as well as Bank Nifty behaved. This was one beautiful trade. I have mentioned to place this short position over here, keeping your stop loss just above that candle itself and targeting all the way to this zone. This is another beautiful trade, guys. Look at this, guys. Look at this, guys. How beautifully the market behaved. 1, 2, 3, 4, 5. 5 beautiful trade setups in Nifty. This is about my trade analysis, guys. I hope you like it. Please, if you find my videos valuable, guys, try to share, like, and subscribe, and leave a comment below if you have any suggestions, or in case if you want to connect to me, I have mentioned my Instagram over there, so anyone over there can reach out to Instagram as well. So this is about my trade analysis, guys. Hope you my knowledge over here is helpful for you. Keep pushing yourself, try to analyze, and try to improve daily, guys. Thank you.